Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is Friday, March 14th, about 7 minutes till 9 a.m. Eastern Time. So, looking at the news today, just University of Michigan at 10. That has been a market mover lately, on and off. So, be prepared. We always have volatility at 10 o'clock, anyways. So, we'll see what goes in with that. We are back to, if you look at my trend bias, there's not one thing in any of these squares except for the word bearish. That means that we are currently oversold. Uh, so, as with anything, you can stay oversold, but it's any time that you see structure going the other way, you should definitely respect it and start going with it instead of looking for the next short. Uh, and then until it breaks, because uh, these reversals out of these oversold conditions can be brutal, even if we are going up to a higher short. And usually you would get at least a 3-day reversal out of one of these oversold conditions. We've only been getting 1-day reversals at the most so far. Not on my calendar yet, but the VIX is going to expire next Tuesday morning at 9 o'clock, uh, followed by the FOMC next Wednesday at 2, and then options expiration, quad witch, next Friday. So a lot of mechanics going on in the market uh, here in the next week. Looking at really what are coming into the open yesterday. We had an uptrend marked with this red, diagonal line, and then when that broke, it was just a switch, right? And you can actually see that downtrend was intact even before the uptrend, right? But that's where it snapped, and we just fell on both of these indexes after that. And then for the session, the Qs traded between 467 and 480. The SPX cash traded between basically 5,500 and 5,600, and the SPY traded between 550 and 560. Those were your ranges yesterday. We did come back down and retest on the NASDAQ this 19,201. Took it out by a couple ticks, nothing to even write home about, and basically held it yesterday. The ES made it a lower low, right? Got to some older single prints from last November, or I'm sorry, from last September 11th, these single prints were from. And then we took out two of those and we bounced off of that bottom set and then, come up. So we had divergence on the daily chart yesterday where the ES made a new low, the NASDAQ did not, which can be, a bullish indication for reversal. Sorry about that. And then looking at what that did to structure, right? We have signal prints on the edges here, the Russell and the Dow bearish signal prints to the downside. I'm still watching these XS and A lines from the Wednesday session. Those I think are still really where you're going to draw the shorter term line in the sand. You might be able to get two-way trading, under that, but I would expect less two-way trading potentially above that line. As I always say, I would rather just sit on my hands if I feel like shorting above that line. I'd rather look for shorts after you cross over it and come back under it. That's just my style of trading. I just think that you could be playing on the wrong side and fighting yourself above that line. So I don't like to do that. And then looking at the positioning for next week and today, we basically touched 55.05 yesterday on the cash market. So, right down here to this 55, that should still 5,500 should still be considered your floor, and until you can cross under it, and the VIX is rising even more. So that means the VIX would start having to maintain above the 24 $25 level on the new front month contract. And then we are currently up about 50 points after closing at 55.25. So we would be around, if we opened right here, we would be right around 55.75 is where we would be at this point in time. So 5600 is going to be your window still that you need to cross above. I would expect it to be a major support resistance line here in the near future. Uh, and we'll just have to see which side we can stay on. And then looking at the SPY closed yesterday at 551.42. We're currently trading 556, almost 557 right now. So as we look at 557, you can see 555 to 560, really your little markers for today. And you can see heading out into next week, you got 560, and then 563 to 565 is your next resistance above. Looking at uh, the Qs closed yesterday at 468.34. We're trading just under 475. That's been our overnight high, basically, is right around this 475 marker. We, breached it a little bit. Uh, and you can see for next week, it's very clear on these $5 strikes for next week. There's really not much in between. So those are basically 205 to 210 point, you know, uh, ranges between each of these numbers. And 480 for today is going to be your major support resistance line that is just above us here. Uh, if that would be another 200 points up. You can see 475 for this week and next week is not that big of a deal. And then I would expect 470 to be your floor. That would be basically right now we're up 244 points, so we would come back down. Um, and be about 35 points above unchanged on the session if we hit this and not get to unchanged potentially. And then we'll see, basically we're right at this decision point now. Do we want to cross over 475 or not? um, Looking at where we are as far as structure, we basically right now have a 4-day balance down here because a lot of this action was put in near these lows on Tuesday, I believe it was, or Monday. So as we look at, basically what I'm watching is uh, 56.38 basically, 56.35 to 40. You can, keep that in mind. That should be your top of the range until we can, break above that potentially. Staying above the low from the 11th, which I believe is Tuesday. That's really what you want to watch. That's what held on the NQ, but not on the ES, and the ES, got back up into range. Again, we are, substantially above that low right now, and pushing up around this, you know, 38.2 on the sequence that I was watching, which might not be a great sequence to watch, to be honest with you. We'll just have to see how it goes. And then as we look at one time framing, that is with both of these indexes that I'm going to be watching. Basically, Tuesday's range. I think that's what we should be held within today on both of these. So you could mark off Tuesday's range and see, things don't really change for me until you get out of it. And again, that's going to be that 4-day balance. Today would make it a 5-day balance, a little bit more going into next week. Looking at the overnight session, we've got 49 quarter is almost 50 points in the overnight session. You can see that we closed, settled down here just above value area low, uh, and then we've rotated all the way up into and above value for the ES in the overnight session. Uh, Again, hitting those that major area of 5,500 in the ES. And if we look at all the indexes, you can see the Russell has rotated back above these signal prints from yesterday. So there are bearish trapped below. So your first tell, if for on any of these indexes, if you're watching, but when you see this type of structure, is do these bears get saved, right? Does someone throw them a lifeline? Can you get back in here? That means that there's really not any pressure from the bulls, right? If the bulls are really want to screw a couple of traders after being screwed for what, a month now, uh, that they're gonna not let it come back under these single prints for more than a blink of an eye, and very shallow. Not going to get into this other auction at all. Remember, these are different auctions above and below. So you would rotate up towards this XS and A line, and then you would make a decision on what you would want to do. Again, I kept those XS and A lines on all these indexes, and until we someday in the future get back above them, I'm gonna keep watching them. So you've got, uh, you know, 19,727. So just call it 19,725. That's going to be where I'm going to watch. I think that we should get a test of that sometime today. The same with 5633, and the same with 41,611. Remember, if what should happen doesn't happen in the market, the opposite happens with equal magnitude and force. That means that these single prints down here for the Nasdaq would be back on the table, right? The Nasdaq would probably end up taking out the low that it held yesterday and the low that it held on Tuesday, and keep going. And the same with the ES. The next stop on the bus down below is basically 100 points down for the ES. You're looking at 5,400 will be the next stop on the bus. But I think, and again, you're going to have, and we had this, I think I mentioned this like a week ago. Everyone and their brother that wants to get long this market has stops under yesterday's lows. So if we start taking those out, it's just going to be a massive stop run once again, or it should be. I would not expect a look below and fail. We'll have to look at the VIX and the VXN to see if that does happen. Uh, you should not get too unchanged in these markets. If it's going to be a strong market, you should leave these points of control untested. That's going to be your first sign. If we get to unchanged and we start trading these points of control, it's not going to be that bullish of a day. And to be honest with you, what should happen is we end up pushing through these in the afternoon, these XS and A lines, after potentially rejecting back down and filling back into yesterday's high. If it's going to be bullish, we're going to come up here, we're going to hit these, we're going to come back down to yesterday's high, and we're going to push through, and we're going to close above them tomorrow. It's going to be like a keep away game from yesterday's bears. Um, and if that doesn't happen, right, it's just the same old crap. So again, there is potential that we don't make the real swing low in this market until next Friday, a week from today. So does that mean that we can't get a dead cat bounce between now and FOMC and the VIX expiration next week? That's definitely on the table, that we can get a little bit of a retracement. And I'm looking for like a 200 pointer on the ES. Dogs are having fun today. It's a Dog Friday, so you guys have a great weekend. We'll see what Jack's looking at, and we'll